Welcome to the WENDORGANIZATION. Subscribe. Thank you.
To perform professional technical analysis and build a clear, well-informed chart. By blending price action with smart money and ICT concepts, you'll learn how to conduct a proper top-down analysis, from the bigger picture down to the finest details, and how to enter trades using powerful concepts like supply and demand levels, liquidity zones, and liquidity sweeps. We'll simplify multi-time frame analysis by breaking it down into easy-to-follow steps. By the end of this video, you'll have a simple step-by-step roadmap to confidently analyze the market and enter high-probability
Welcome
trades.
to the WENDORGANIZATION. Subscribe. Thank you.
So please give this video a thumbs up, and if you're new here, don't forget to subscribe. See you after intro. So let's get started. First, what is multi-time frame analysis? Multi-time frame analysis is the process of conducting technical analysis by examining price action from higher time frames down to lower ones. This method allows traders to see the bigger picture first, then zoom in to catch precise, high-probability trade setups. When using multi-time frame analysis, there are three essential time frames.
Welcome to the WENDORGANIZATIon. Subscribe. Thank you.
Higher time frame. This is used to determine the dominant market direction. Who's in control, buyers or sellers? The higher time frame gives you the overall trend and context. Number 2 is analysis time frame. This is the most critical time frame. Here, you assess market conditions, map out the structure, identify key liquidity zones, and define your bias. This is where most of your planning happens. Number 3, entry time frame.
Welcome to the WENDORGANIZATIon. Subscribe. Thank you.
Entry time frame is where you zoom in to look for confirmation signals and execute your trades. Each mentioned time frame has different application. So now, let's zoom into the details and break them down step by step from a micro-level view. The multi-time frame analysis starts with the higher time frame analysis. The first step before doing any chart analysis is to focus on 4-hour or daily time frames. This is because these higher time frames
Welcome to the WENDORGANIZATIon. Subscribe. Thank you.
Aligned with the bigger picture and stay on the right side of the market. What we should do is identify the price's current dominant trend, whether it's in an uptrend, downtrend, or range-bound. This helps you understand the market's overall direction. Along with that, you'll need to highlight key support and resistance levels on these higher time frames, especially on the daily chart. These levels act as critical points.
Welcome to the WENDORGANIZATIon. Subscribe. Thank you.
Important information. Identifying these areas is critical because the market is fractal, meaning patterns repeat across different time frames. A minor reaction or shift on a higher time frame, like the daily or weekly, can lead to a significant change on lower time frames. Before placing any trade, we need to assess how much room we have before reaching a key level on the higher time frame. The next key factor to do for analyzing the higher time frame.
Welcome to the WENDORGANIZATIon. Subscribe. Thank you.
Your main higher time frame is to identify who's in control, buyers or sellers. What makes this important? Identifying which side is in control is crucial because if you don't know whether buyers or sellers are controlling the market, there's a high probability you'll end up on the wrong side of the market. Before we go any further, let's quickly recap. How do we identify who's really in control of the market? To see if demand or supply is in control, we need to check
Welcome to the WENDORGANIZATIon. Subscribe. Thank you.
Price origin. For example, if the price is in a downtrend and comes from a fresh, unmitigated supply zone, then supply is in control, and we should look for selling opportunities. Supply remains in control until the price hits a fresh demand zone and reverses upward. At that point, demand takes control, and we should stop looking for selling opportunities. So, identifying who's in control depends on how the price reacts to unmitigated supply and demand zones. Always remember that higher time frame fresh zones take priority over the time frame you're analyzing.
Welcome to the WENDORGANIZATIon. Subscribe. Thank you.
A fresh, unmitigated zone from the opposite side on a higher time frame. It will shift control from demand to supply or vice versa. Every time the price breaks through a demand or supply zone, a new zone forms on the opposite side, and one side loses control. For example, if the price breaks and closes above this supply zone, demand takes control, and a new demand zone forms. If the bullish movement continues and the price breaks structures to the upside, each demand zone becomes a new buying opportunity since our bias is
Welcome to the WENDORGANIZATIon.
This bullish bias stays until the price hits a fresh, unmitigated supply zone. Once the price reaches this zone, we no longer consider the market bullish, as it has the potential to reverse the price and cause a temporary correction. At this point, there's a battle between buyers and sellers, and the market might consolidate between supply and demand until one side takes control again. If the price breaks the most recent demand to the downside, it shows that supply has taken control, offering a selling.
Welcome to the WENDORGANIZATION.
On the other hand, if the price breaks the supply zone to the upside, it indicates demand is in control, shifting the zone from supply to demand and giving a great chance to go long. Now, let's circle back to our main topic. The next step after completing the higher time frame analysis.
Welcome to the WENDORGANIZATION.
Frames, like 1 hour and 30 minutes and 15 minutes time frames. These time frames are the most important parts of technical analysis you'll ever do. Because once you get the hang of it, you can avoid common traps and make better trading decisions. The reason we choose the 1 hour and 30 minute time frames for market structure mapping is that these time frames are mid-range. They don't produce.
Welcome to the WENDORGANIZATION. Subscribe, thank you.
Making their data more reliable and understandable. Additionally, they provide signals more promptly than higher time frames. So, to do proper technical analysis in this step, you need to identify the market's direction by focusing on major highs and lows to determine whether the price is in an uptrend, downtrend, or
Welcome to the WENDORGANIZATION. Subscribe, thank you.
Precise outlook for your intraday bias. Once you've identified the overall direction and major structural swing points on the chart, the next step is to mark any breaks of structure and look for market structure shifts or changes of character. After finishing the market structure map,
Welcome to the WENDORGANIZATION. Subscribe, thank you.
PD arrays within the analysis time frame. These PD arrays could be a fair value gap, an order block, a breaker block, or a mitigation block. But at this stage, the most important ones are order blocks and fair value gaps.
Welcome to the WENDORGANIZATION. Subscribe, thank you.
Chart. We noticed that the price formed a market structure shift by breaking through this major low and closing below it. We also noticed that this bearish move created a fair value gap located just below an order block, making it an ideal supply area that could reverse price if it retraces
Welcome to the
back up.
WENDORGANIZATIon. Subscribe, thank you.
Once we've identified the key PD arrays, the next step is to mark liquidity levels and zones on the analysis timeframe. But why do we need to do this? Because liquidity areas act like magnets.
Welcome to the WENDORGANIZATIon. Subscribe, thank you.
Toward them in the market. Also, smart money and market makers use these areas to fill their positions and move prices in their favor. By including liquidity areas in your analysis, you can avoid getting trapped by having.
Welcome to the WENDORGANIZATIon. Subscribe, thank you.
There are many types of liquidity areas, but to simplify the concept and create a clear roadmap for multi-time frame analysis, let's focus on the most practical and main ones. But before we continue, if you're looking for a reliable trading platform with unique
Welcome to the WENDORGANIZATIon. Subscribe, thank you.
Markets.com, a cutting-edge platform for trading forex, stocks, crypto, and more, all in one place. Built for traders of all levels, Markets.com offers top-tier security, user-friendly tools, and a wide range of trading pairs, all designed for an exceptional trading experience.
Welcome to the WENDORGANIZATIon. Subscribe, thank you.
Markets.com secures your assets and funds and is trusted by nearly 5 million users with 17 years of experience. New clients can receive up to $2,000.
Welcome to the WENDORGANIZATIon. Subscribe, thank you.
So, if you're after a platform with excellent service, register with Markets.com using the exclusive link in the description. Number 1. Equal lows and equal highs. Static liquidity usually builds up beneath equal lows.
Welcome to the WENDORGANIZATIon. Subscribe, thank you.
Stop-loss orders are stacked around these areas. These zones become prime targets for liquidity sweeps before the market makes a reversal. Number 2. Sell-side and buy-side liquidity, above or below major swing highs and lows.
Welcome to the WENDORGANIZATIon. Subscribe, thank you.
And lows. Liquidity also collects just beyond major swing points where stop orders are hiding. For example, inside this range, this swing high acts as a buy-side liquidity pool that we can target for future exits or profit-taking. Number 3. Dynamic trend lines and channels.
Welcome to the WENDORGANIZATIon. Subscribe, thank you.
Liquidity as well. When price approaches the outer edges of a trend line or channel, liquidity tends to gather just beyond these boundaries, creating potential opportunities for smart entries or exits. The next important step on our analysis timeframes checklist is
Welcome to the WENDORGANIZATION. Subscribe. Thank you.
We want to carefully look for signs of liquidity grabs and stop hunts around key static liquidity areas, such as major highs, major lows, or important supply and demand zones. Catching these sweeps gives us a huge edge because it shows where the market has just collected liquidity and is likely to
Welcome
shift
to the
direction.
WENDORGANIZATION. Subscribe. Thank
The
you.
idea behind identifying liquidity sweeps in our daily bias is simple. When sell-side liquidity is cleared out through a sweep, the price often moves towards buy-side liquidity, and vice versa. This understanding helps us predict the next likely move of the market, especially when we're analyzing the 30-minute, 1-hour, and 15-minute timeframes.
Welcome to the WENDORGANIZATION. Subscribe. Thank you.
Important is that they add extra confirmation to our trades. Here's the logic. The market needs liquidity to build momentum. If price doesn't sweep liquidity before reaching a key level, it often uses that area to gather the liquidity it needs for the next major move. For example, look at this
Welcome to
case.
the WENDORGANIZATIon.
Price
Subscribe. Thank you.
liquidity above this major high with a strong green candle. But notice, the very next candle quickly closed back below the range. So what does that tell us? It signals that since the buy-side liquidity has already been taken,
Welcome to the
price is now likely
WENDORGANIZATIon.
to move
Subscribe.
towards
Thank you.
sell-side liquidity sitting below. If this behavior aligns with the overall market direction, it can give us a high probability selling opportunity. Even if it doesn't match the dominant trend, a liquidity sweep can still suggest a potential reversal, even if only temporary. Now, after completing all these key steps on the analysis
Welcome to the WENDORGANIZATIon. Subscribe. Thank you.
the overall market sentiment and a clear idea of what price is more likely to do next. If everything looks perfect, meaning you've identified a high-quality setup that aligns with your trading plan,
Welcome to the WENDORGANIZATIon.
macro
Subscribe.
timeframes
Thank
or
you.
agreement, then it's time to move to the next step. At this stage, we start searching for an entry point. This is where the entry timeframes, like the 5-minute or 1-minute charts, come into play. Here, you zoom in even closer to look for confirmation signals.
Welcome to the WENDORGANIZATIon. Subscribe. Thank you.
The main reason we zoom into the lower timeframes for execution is simple. It gives us a clearer view of the price action and offers a higher risk-to-reward ratio when we take positions on the micro timeframes. Now, first things first.
Welcome to the WENDORGANIZATion. Subscribe. Thank you.
You need to wait for the price to tap into your analysis timeframes area of interest and show signs of rejection. Once you see rejection, the next step is to look for a market structure shift or a change of character. After a market structure shift is confirmed,
Welcome to the WENDORGANIZATion. Subscribe. Thank you.
this could be a fair value gap, an order block, a breaker block, or a mitigation block. Which one you focus on will depend on your trading model and personal preference. And finally, after identifying the PD array on the entry timeframe, we can use it to open a position and execute our
Welcome to the WENDORGANIZATion. Subscribe. Thank you.
Timeframes can be used to add extra confluence and confirmation to our trading setup, helping to increase its probability of success. You can also strengthen your setup by looking for VSR patterns or using tools like the volume profile or the fixed range volume indicator on the entry timeframe. Now,
Welcome to the WENDORGANIZATion. Subscribe. Thank you.
we have an unmitigated bearish order block created by the bearish market structure shifts move, presenting an ideal area to look for short opportunities if the price taps into it and shows rejection.
Welcome to the WENDORGANIZATion. Subscribe. Thank you.
Lower time frame, typically the 5-minute chart, to closely monitor the price action and watch for signs of a market structure shift. With the 5-minute chart on the screen, the next step is to patiently wait for the price to form both a market structure shift and
Welcome to the WENDORGANIZATion. Subscribe. Thank you.
Once these conditions are met, we can look for an entry to go short from the 5-minute PD array. Now, we can see that price has created a market structure shift by breaking and closing below this swing low.
Welcome to the WENDORGANIZATion. Subscribe.
Buying momentum is fading and sellers are once again taking control. Now, our bias shifts to bearish on the 5-minute chart, and we can confidently look for short opportunities. Also, we can see that price has created a
Welcome to the WENDORGANIZATion. Subscribe.
closed candles. The price formed a swing high, then a swing low, followed by a higher high, before immediately reversing and breaking below the down close candles. So we have our 5-minute PD array that we were looking for, so we can set a sell limit at its lowest point. aiming for the next clean sweep.
Welcome to the WENDORganization. Subscribe, thank you.
This shows how truly combining multi-time